Hi there, I'm Michael Bovee with ConsumerRecoveryNetwork.com. Thanks for tuning in to our YouTube channel, DebtBytes. I want to continue on with our debt settlement video series and answer the question of what types of accounts can be settled. The number one rule to an account that can be settled is one that you're late with. I know that sucks, but it's true. The only time a creditor is going to agree to accept something less than what you owe them is when the threat looms large that they'll never get paid again. So oftentimes an account can be settled when it's in advanced stages of delinquency, and for different types of accounts that can mean different types of things, but let's focus on credit card debt. When you've fallen behind, probably in about month 4 is when you start to begin to have that dialogue with your credit card bank about your options for settling an account. There's a little bit of a science to the settlement process. We talk about that throughout this video series on DebtBytes. We talk about it at the ConsumerRecoveryNetwork.com website. I don't want to focus on how that gets done. Let's just focus on, do you have a shot at settling some of these accounts? So, rule 1, you have to be behind. And when it comes to the types of accounts, typically debt settlement is a tool for debt relief that you deploy on unsecured accounts. And that would mean revolving credit card accounts, store cards, gas cards, even deficiency balances. And those would be when, say, you have to turn in a car because you can no longer afford the lease payments or the note payments on the loan. You voluntarily surrender the car, they sell it off at an auction, they get far less than what you probably owe on the car. And so the difference between what they auction it off for and what you owed is called a deficiency balance. That's now unsecured because they don't have the car anymore that they can threaten to repossess or take away. So you can settle deficiency balances on car loans, even on mortgage debt. In today's economy with second mortgages, those are really a good target for a settlement process. Another type of account that you can often settle for less than the balance owed, though usually not as favorably as credit card debts, are medical bills. When you've fallen behind on medical bills or you just can't afford those medical bills, you know, a lot of times medical debt leads to and is one of the leading causes to bankruptcy. And so depending on how much debt that is, your sights on settling that are not going to be anywhere near as favorable, often enough, as your sights and targets for credit card debt, but they are negotiable. One of the things you can also think about, depending on your income and whether or not you can qualify, are hospitals are required to write off a certain amount of services every year. And you may be one of those people that can apply for and have those hospital bills either reduced or even written off. So be sure to focus on some of those attributes to medical debt as well. I want to move on to some types of accounts that shouldn't be settled. And this is a little different than what you might hear out there on the internet or through debt relief service providers. You really shouldn't try and settle small balance accounts unless, of course, you're already way behind with them many months, they've already charged off, and you're dealing with debt collectors. By small accounts, I mean accounts that are probably less than $1,000. And let me add a little color to this. Again, you have to fall behind in order to be able to reach a settlement. When you fall behind, you're going to be subjected to late payment penalties, often around $35. Whatever your interest rate was before you fell behind, you can assume on credit card debt for sure that it's going to get jacked up to some default level. So now you're not going to be dealing with whatever interest rate you had. You're going to be dealing with 29, 31, 32% interest. So your balance is going to increase from that, and that interest rate jacking happens after your first 2 monthly billing cycles are missed. So that all increases the balance you owe. What if you only owe $950 on a $1,000 credit limit and you fall behind and your late payment puts you over the limit? Now you're going to get charged an over limit fee. So suddenly you're dealing with, at time to settle, when you're going to get the most favorable terms and most favorable reduction, you've got an inflated balance that was, say, $950 and now it's $1,500 and you settle for 50%. So you pay $750. What'd you save? $200. What are some of the implications? Well, you could have come up with a plan to not have to settle that account and had a positive trade line remain on your credit report. So small balance accounts, when you can avoid having to settle them, you should try and target strategies that will help you do just that. So those are just a few of the brief details about the types of accounts that you should target for settlement and the types of accounts that you should avoid using settlement. Thank you for watching.